Appreciation is not an investment strategy. I've seen way too many posts on this sub lately about people wanting to buy properties with negative cash flow assuming appreciation is always a given. And even more people claiming that's a good idea because eventually you'll be able to refi into a better rate and the place will obviously increase in value. No, no, no. That is called gambling, not investing. Unless you're best friends with Jerome Powell and the next 3-4 presidents, you are simply guessing, not investing. If you do have some kind of crystal ball, please let me borrow it. But I doubt you do. REI fundamentals exist for a reason, and we don't simply ignore them when market conditions change, as they have been at an extremely rapid clip for the last couple years and also during the near-zero interest rate years of the aughts and teens. If anything, it is time to get our spreadsheets and calculators out and do even more due diligence about our deals. Not simply buy a stinker money pit because you think appreciation will take care of it. Bad. Bad. Bad idea. Literally anything can happen. If we invest based on sound fundamentals, we can mitigate those eventualities. If we're already underwater from the jump, we're going to watch our net worth melt away like sand through our fingertips. Come on, people. Let's stop pretending appreciation is a strategy. Please. Edit for emphasis. I'm talking about negative cash flow. I cannot believe this is a controversial post here. Seriously. Appreciation that may or may not happen before you have to sell, minus whatever your carrying cost and negative cash flow is not an investment. It's a loser. Last edit, and muting this thread as my inbox is decimated. Big 2007 vibes in here. Have fun paying your mortgages with appreciation. I'll stick with the fundamentals. I can carry my mortgages for years even if they're empty. That doesn't mean it's a good idea. Bizarre post. I guess nothing can classify as an investment, since they're all merely educated guesses that hinge on future external factors. Like you said, literally anything can happen. Better not take any risks, I guess. There are plenty of metrics you can use to help predict appreciation, much like any other traditional investment. This isn't playing the lottery. Not true. Lots of assets are invested in because of expected appreciation. For example, stocks that don't pay a dividend, collectibles, commodities, futures, options, currency. We don't have to have a crystal ball to rely in part, not wholly, on the concept of real estate appreciating. We don't have a crystal ball about index funds, yet those are a sound investment. We can't know those appreciate. But we do have a reasonable track record to indicate they likely will. With REI, appreciation is one component of returns. I will conservatively estimate that one component, and it might be the gravy, but I'm not going to ignore a huge factor in what's likely to happen over time. Appreciation is a bonus. In all likelihood, it should occur naturally, and you can certainly force appreciation, but you're very right, buying a negative cash-flowing property with the expectation that it'll appreciate and win someday is like betting on crypto to rise to 80k again. It could, but it also might not. Something tells me OP has very little investment experience. So many of his replies seem clueless. Also, let's look at Canada, UK, and Australia. You can't find any properties in those areas that cash flow at 25 down. Is that to say that the people who bought there as investments are upset with their purchases? There's no guarantee cash flow is ever coming back to America. It's possible that we have to get used to this new reality. Buying investment with negative cash flow is stupid, I agree. But expecting appreciation as investment strategy, I disagree. To me, positive cash flow is the real deal, appreciation is just icing on the cake. Any investment is a gamble always. Whether it's real estate, stocks, funds, currency, cash, art, starting a small business, a college degree, the list goes on. This post is nonsense. I hate this post. I live in California and that appreciation strategy, not the dumb cash flow negative one, made me rich. So are you saying no one should buy land? Because I know a lot of people whose entire investment strategy is and has been based on appreciation, and they have been doing this stuff since the 80s. You have a great point, and I just want you to know that I don't know what could possibly be controversial about this either. According to Sam Zell, appreciation and tax benefits are the cost of illiquidity. So if people are counting it towards their returns, they likely aren't accounting for illiquidity. If the region you are investing in struggles or fundamentally changes, you're in a tough situation. Straight truth. I got mass downvoted for telling someone the same thing a few days ago. It's confusing that people don't understand the basics of investing. Real estate appreciates for several reasons. It is absolutely a valid strategy. Even a better marketing strategy is an easy way to increase the value of an asset, i.e. appreciation. Is it a sure thing? Nothing is. Is it more than gambling, where the odds are designed against you? Of course. Is it more than playing the lottery, where the odds are all but impossible? Of course. But it, like all investing, is a strategy. It's a plan of action designed to achieve a long-term or overall aim. A plan isn't reality. Is it not yours? IDK and IDC, as that's your opinion. Who are you? I completely agree, Op. Small time, conservative investor, Central California. We've been looking for an additional property or properties for a while now. And while we won't be saddled with a ridiculous interest rate cash, frankly the timeline for us to recoup our investment due to current housing prices is ridiculous. We do the math pretty regularly, and HISAs are still a better bang for our buck than adding additional rental properties to our portfolio. Bonus no additional headaches from tenants, plumbing emergencies, etc. I think planning on appreciation outpacing interest rates in the next 3-5 years is probably a poor decision. However, I think your premise that it's not an investment strategy is very short-sighted. Appreciation has always been and is still today the primary wealth-building tool in real estate. It's not a good strategy for a small portfolio, but a large one it's excellent. Especially for preserving wealth. I still have people buying properties at prices that don't make any sense. I just put an offer in on a duplex that was across the street from a triplex I own. It sold for an amount that you would be lucky to break even every month if financed. Maybe there will be a lot of those properties coming back on the market soon. Yes, it is. Everyone here just read BiggerPockets and repeats everything he says. Yes, it is. We live in an inflationary economy. My dad did that here in LA back in 2008. He had like $6 million worth of properties. He bought a house for $1.1 million, rented it for $4,500 while his mortgage was $6,500. I mean, it went up to $1.3 million but then crashed Lamau. He learned his lesson and now he does rental. I don't agree with this at all, though I do think it's better to value cash flow over appreciation. California knows how to party. California. I see the heat you're taking. I don't have time to simply read through everything. However, I generally agree with you. My strategy would never be to primarily rely on appreciation itself. Appreciation can and should be considered as secondary benefits in my opinion. Cash flow with appreciation sprinkled on top is the way. What a dumb post. So hoping for a tenant is gambling, got it. This real estate stuff is easy. But if you buy a place with a mortgage and pay it off, does it matter that you had X years of negative cash flow if there's a return in the long run? I would never buy a place where I'm operating at a loss because I just can't afford it. But I think breaking even in the short term isn't the worst thing in the world. I cannot believe this is a controversial post here. Seriously. Might have something to do with your tone and delivery. Don't do that, it's gambling. Continues to describe all the other ways that we gamble. Investing in anything is gambling, you nerd. The point is to find whatever edge you can and exploit it. I mean shit, unless you stick all your money in a 5 savings, There's always potential to be in the red investing in anything.